Hello, so welcome back again. The last video that I posted, I promised to show you how to find your daily dealing ranges and how to make entries. All right. So right away, I'm going to the charts. Let's go right into the charts. Okay. You don't need to waste time because I'll be posting other videos. I need to post another video after this for you guys. Okay. So this is going to be a one setup for life. Okay, it's what you can apply every day on every asset, on everything that you trade every day. Okay, so this is about how to find a daily dealing range and how to frame your entries, right? So in this chart, this is the GBBAUD. So let's go to the daily time frame. Okay, the daily time frame is all I use to find my daily dealing ranges. Okay, because I'm a day trader. So going to the daily time frame, all I need to see or all I need to note out or to point out is only I need this only this point only, this bearish order. I don't need all this. I don't need all this. I don't need this one only. Okay, so having this in mind, you can see that we have a general bearish bias. Considering this, okay, this is a general bearish bias. Okay, where okay, this is a general bearish bias. Now, having this in mind, we have to find out what the next day might look like. Okay, but generally we are bearish. The next thing we have to mark in our charts is the immediate liquidity key zone. That can be the buy side or the sell side. For me, the immediate liquidity key zone is this low, this one. All right. Now, I want us to use this to find out how we, for example, would find our entries on Friday. Okay. So the general order flow is bearish, and the next thing I have to mark in my chart is my previous day high and my previous day low. I see previous day's highs and previous day's lows can be used as reversal points in the market. Okay, they can be used as the liquidity key zones. So this is a Friday's candle and this is a Thursday's candle. So if we have to use this Thursday's candle to frame the Friday's trade, what will you do? I'll do this and I'll make sure we see on how to make entries. Okay, it's a one setup for life. You never need anything else from this. So let's mark our previous day low and our previous day high. That is our range. That is our daily. That is our trading range. All right. So let me zoom. Okay. So that is the Thursday's high and the Thursday's low. And generally, we can see that the price being bearish, the most recent point of interest or the institutional reference point is this gap. Okay, that is where the price is coming from. It's coming from the internal liquidity. Okay, so it's the internal range liquidity, is the fair value gap, the daily fair value gap. Okay, so and we know that the higher time frame points of interest or the institutional points of reference on higher time frames have high chances or have high potential to push price further. So if this price is coming from the daily fair value gap, where is it headed to? This sell side liquidity. It's the most immediate sell-side liquidity. Having that in mind, we know we are bearish, right? So having this range, we go to the lower time frame, that is the 4-hour time frame. I'm trying to really make this brief because once you know this, you can apply it anywhere else. I don't even need to give you a lot of examples. This one example is enough, okay? Because you can apply this anywhere, at any time on any assets that you trade. Okay, let's look at this again. In the 4-hour time frame, we can see that the price is currently on a fair value gap. There is a 4-hour fair value gap right there. This increases our confluence of the bearish argument. Okay, so this is the fair value gap on a 4-hour time frame, and right now the price is at 4-hour fair value gap. So my belief is that this fair value gap or this institutional reference point is going to push the price down to this external range liquidity. Okay, so having that in mind, and now having our previous day high inside the fair value gap, what do we wait next? We wait for a liquidity sweep of the previous day high, and that is where we are going to frame our entries. Okay, so let's go to the 1-hour time frame. 1-hour time frame. On a 1-hour time frame, just keeping our drawings intact, just to guide us. Let me adjust this a little bit. Okay, I love having my charts very clean. So that is my previous day low. This is my previous day low, and this is my previous day high right there. This is my previous day high. Now, and again, looking back, this is our order block. That is our order block. It's the hourly order block, or it can be an order block again with 4-hour time frames, depending on how you frame it. Okay, the beginning of these up close candles before this huge bearish momentum is our order block. So that is the OB. That is the order block. Okay, so this increases our confluence a lot. Having that previous day high as liquidity, the price is currently at the 4-hour key zone, that is the fair value gap. We have an order block right there, so that increases our confluence on the bearish argument. Okay, so let's go right to the 15 minutes. We need to find entries now. The reason to go low. Okay, the reason to go low. At this point, I would love to mark my Asian low and Asian high. So I'll mark my Asian low beginning from right at this point to right at this point. That is my Asian session low, and this is my Asian session high. Okay, Asian sessions again, they have high liquidity. Okay, so they have high liquidity. So this increases our confluence. At this point, when London opened, we can see that the Asian session swept the previous day high, and then London opens and swept the Asian session's high, and it traded into the order block right here. And generally, we are in a 4-hour fair value gap. Okay, so how do we find our entries to go low? Targeting our the closest sell side liquidity. So at this point, you can see that this high was swept. The Asian high was swept right there. Okay, the Asian high was swept right there. Okay, now at this point, we don't want to see displacement upwards. We want to see displacement downwards. Okay, we want to see displacement on downwards. But even before we go on a lower time frame to find the details on our entries, okay, we have to see that all this meets our expectations. Liquidity sweeps into a higher time frame key zone. The next thing we wait is a market structure shift. Something like this. Something like this, okay. Breaking structures to the upside, and then we have to expect a failure swing or a market structure shift. Just trading below the previous swing low right here. Trading below it and displacing below it, then going back to a reference point can be the BD array, can be the breaker block or the fair value gap, or this when swing high again and then trading back down. But my overall point is I don't want to see the price going higher at this point, displacing. I want to see the downward displacement. So at this point, I want to go to the I want to go to 5 minutes to wait for market structure shift. Okay, for the 5 minutes. Now that all my arguments are met, all my reasons to go down are met. So I'm waiting for the last part. That is the change of character to go low. And having change of character, I need a change of character and a leg with all the BT arrays or with a fair value gap or the breaker block or the mitigation block to go low from. At this point, we can see that the price tapped into the order block. Okay. And we can see that the 5 minute just changed character right there. This is a change of character. Okay. And this leg has a fair value gap. The 5 minute fair value gap right there. And again, we can see that that swing has a breaker block right there. That is my breaker block. And I love this so much because when you see a breaker block with a fair value gap, that is the high probability trade entry. Okay, so at this point, I would gladly make my entries at the retracement to this zone, this breaker block or this fair value gap. So I'll just put my sell limits right there. Okay, and my stop loss, I will place it just above that swing right there. And where do I target? I'll go for 15 minutes to see my major points of target. Okay, I'll go for 15. I'll go to 15 minutes time frame. And my first target is edge and low. My second target is the previous day low, or even you target all these lows, that low and previous day low, and eventually you target the sell side, the extreme sell side liquidity, and we can see that the price delivered. So what am I trying to say? The first thing you have to do is find your dealing range. Okay, at this point there is no point of you going to the weekly time frame because you'll just be wasting your time. Okay, you'll just be wasting your time. You have just to find the previous day's candles if you're a day trader. That is the best dealing range for you. Like you just saw what I just did. It's very, very simple. Find the previous day high, find the previous day low, find the sweep on either side, and you can frame your reversal right there. Okay, and this is what I just did. It's very, very simple. This is what you can apply on every asset that you trade. Okay, and it's really working 80% of the time. So right there, it's very I hope I'm very educative. I've given you some insights on what to do, and I hope you apply this on every asset that you trade. But before you do that, just backtest first. Backtest. Sometimes the previous day high or the previous day low might not give a reversal. The price can just displace and just trade continuously. So I'm not saying every time the price gets to the previous day or the previous day low, just find your entry. Just find or you rather have to have a lot of confluences to come in hand to support your argument. Okay, but that is how you make or you point out your dealing ranges, and that is how you make your entries. After liquidity sweeps and trading into the major point of interest, wait for market structure shift, and that leg that swept the liquidity must have a fair value gap or a breaker block or a mitigation block. Okay, and that is how you do it. So up to this point, I just want to thank you for watching this video and stay tuned for the next video. Okay, there is a lot coming. I'll make another video very soon, so just stay tuned and learn from this backtest, and good luck.